name is Raman Jokhakar. I am a practicing chartered accountant, and I also serve on the board of the forum. I also serve as the co-chairman of the Journal Committee of the Bombay Chartered Accountants Society after a 5-year stint as its journal's editor. And I'm delighted to welcome you all on this lovely Saturday morning. All the lay citizens, office bearers, members of the forum, professionals, students, respected principals, professors. It's great to have you all with us for the next 90 minutes. We heard from Mr. Ranina, the forum's chairman. Just recently, he spoke on the union budget on 2nd February. And he told us about key facets of the union budget, as he has done over the years. This is the second time that the forum is having this kind of a panel discussion as a follow-on and in a digital format so that we can reach a much larger audience. I also wish to acknowledge the presence of educational institutions who have joined in support of this event. DES's Kirti M. Dungarsi College from Mumbai, Kaveri College of Arts, Science and Commerce from Pune, RKSD PG College, Department of Economics, Kaithal, Haryana, and Vivekananda Education Society's College of Arts, Science and Commerce from Mumbai. We also want to acknowledge 24 Frames Digital, and we are really grateful to them for having supported Forum over all its event for providing this digital support and this entire platform so that we can have events like this one. And they've been doing this gratis for us, so we are really thankful to them as well. Let me briefly walk you through the forum's history, rather its illustrious history. Forum of Free Enterprise was set up in 1956 by late A.D. Shroff with the object of educating the public on free enterprise and its close relationship with democratic way of life. He was its founder president from 56 to 1965. Later, Mr. Murarji J. Vaidya was the president during 65 to 68. And then the legendary Nani Palkhiwala was the president from 1968 all the way up to 2000. Mr. A.D. Shroff was a champion of free enterprise, and his contribution to India's economic development in the fields of banking, insurance, and industrial finance is significant. This is well chronicled in his biography titled A.D. Shroff, Titan of Finance and Free Enterprise, written by Mrs. Sucheta Dalal with an introduction by Mr. Nani Palkhiwala. The forum has played a stellar role in educating the public on economic issues and in crusading for free market economy since its inception. World-renowned economists, statesmen, thinkers, jurists, educationists, industrialists, and others have appeared on its platform and also authored its booklets, and many of them have highly commended its founder for his contribution to institution building. Forum had the privilege of hosting the historical budget speeches of late Mr. Nani A. Palkhiwala and publishing them for wide circulation. In fact, many of you would have seen those small booklets, and that's how I came to be in touch with Forum when I enrolled as a member, and was every time I received those small booklets of about 20, 30, 35, 40 pages, which covered very important aspects of our economic life. The forum was also instrumental in setting up Nani A. Palkhiwala Memorial Trust and the A.D. Shroff Memorial Trust. About 2,000 such booklets that I just spoke about and articles have been published, and over 2,500 public meetings have been organized so far. And you can follow the forum on Twitter and YouTube. And of course, feel free to go to the website and download several of these small booklets. And most of them are relevant today, or definitely when you read them, you'll see how prophetic they were. Let's come to the event of the day, the panel discussion. As you would have seen on the television and in newspapers and amongst all the WhatsApp forwards, if I may say so, Amrit Kal is the theme of the 75th year budget. And therefore, I guess we all should see it from that perspective. And we are looking at shaping the destiny of our nation as we march towards its 100th year. How much of it is Amrit and how much of it is wish? And I don't mean the wish with V, but the wish with WISH. So friends, the content and context both become very important when we look at, a document like the budget document of a country as vast as ours. And just imagine, somebody was telling us at a talk that India is like putting together Europe, North America, and South America together. In diversity, in size, in every which way you look at it, it's massive, as massive as you can imagine on the planet Earth. So we have to see everything that happens from that context. About the budget, it has to address innumerable expectations from a very vast, diverse set of populace. It's a very difficult task, let me tell you. I'm sure as much as one would like to talk about budget and give comments, if you sit in that hot seat or anywhere around it, I'm sure it will be a very challenging task. And, one has to cure problems, give concessions, clarify things, build the direction of the economy, and often the FM has to balance between the present and the future. And generally, I feel the budget addresses three parts. It always has to take care of the underprivileged, those who are in dire need of homes, food, water, health, and those fellow citizens are family members who deserve a lot more and a lot faster. I guess Antyodaya is one of the words that gets used often for an inclusive growth. And without this aspect, the budget doesn't really serve its full purpose. The second section, as I see in the budget, is always the middle class, the taxpayer, the MSME. These people are working, paying taxes, taking risks, consuming, investing, skilling. They have come up out of the bottom of the pyramid and are now the oil and the wheels of the economy. And I have coined the word Madhyodaya for this, taking from the Antyodaya, jargon, that this whole, class needs to come up again faster, sooner, and is aspirational, in the words of, our leaders. The third aspect is the environment and the direction, the infrastructure, the investments, which will, take us to the future. These things take a look into the future and see where we want to go. So it builds ecosystems rather than addressing symptoms. But all these things also take us to the root for everyone, that how we can strengthen the root of our entire system, from defense to infrastructure. And you see a lot of railway news these days. You see ministers speaking about 40 kilometers built on a daily basis of roads. They are allocating 30,000 kilometers of road building every single year. This environment and direction is the third aspect of the budget. While it serves all these purposes, often the union budget is also used to reverse court decisions. Now we come to a little bit of tricky aspects, and each budget often, when they don't like certain court rulings, they use the budget to change the law itself. And that's always not a happy part of the budget. Today we have a very comprehensive panel. We have to look at the social and economic aspects that are overarching sphere within which we can look at, the tax aspects, because, economics and the broader ecosystem is sort of the sky under which taxes, like direct tax, indirect tax, etc., operate. So we have, an economics expert, we have a direct tax expert, and indirect tax experts. All these things are interrelated and they affect each one of us, whether we know it, whether we look at it deeply or not. And all these people that we have today, three of them, they are not only experts, but practitioners. So they have real on-the-ground experience. Let me introduce them very quickly. First, I would like to introduce Dr. Abhijit Phadnis. He has brilliant academic record. He's a rank holder in BCom examinations and a national rank holder in final examinations of ICWA, CA, CS, and CFA. So he's a bright example for all the students who have joined us today. He had a brilliant corporate career with Johnson & Johnson, ANZ, Greenlace, UBS, Credit Suisse, and so on. And he headed a lot of business support functions such as finance, accounting, operations, human resources, administration, and so on. And he was also co-opted on the board of Thane Janta Sahkari Bank, a leading cooperative bank. And he served it for about 3 years. He's currently a director at Gilt Edge Financial Counsel Private Limited, a company he has set up for consulting and financial education. His, I think, great part of his CV is he has participated in over 350 customized executive education program for over 70 leading companies, as well as in over 20 public programs conducted all over the country by Dun & Bradstreet. So he is, I think he's extremely passionate about teaching, about sharing his knowledge, and obviously that means he is learning all the time. He played a key role in global rollout of e-learning in the finance domain in Aditya Birla, titled Simply Fin. He has also launched executive MBA program. He has joined IIT Bombay in devising this program with Washington University, and he has coached many senior executives as well. He is passionate about skilling. He has partnered with Skilldom to cooperate a unique e-learning solution. He has wrote a serial of 49 episodes, which has been animated by Skilldom. Dr. Phadnis also has other interests. He has deep interest in finer aspects of life like music. He writes Marathi poetry. He's an avid sports player. He can spin bowl you. I think we'll see it after a few minutes. And he has taken, very recently, he has taken a hat trick in 2014. In 3 balls, he got all the 3 batsmen bowled out. So Dr. Phadnis, a very warm welcome. We are delighted and honored to have you with us. I would also like to welcome CA Siddharth Bhagwat. Siddharth is a partner with TP Oswal and Associates, a leading chartered accounting firm, and he handles the practice areas of taxation, including international tax, transfer pricing, transaction advisory and implementation, and also valuation. He has been associated with the firm since 2008, and he's a young, shining partner since 2017. Siddharth has been advising, several Indian and multinational clients on cross-border transactions, which carries advice on tax and transfer pricing issues, regulatory, legal issues for inbound and outbound investments. And he does numerous tax and regulatory authority representations. And he's also from academic side, he's a company secretary and advanced diploma holder in international taxation from Chartered Institute of Taxation UK, and under that he specialized in transfer pricing and Singapore taxation. Of course, apart from being a chartered accountant, he's a member of managing committee and convener of International Tax Committee at the Bombay Chartered Accountants Society, and that's how we met. Siddharth has been a member of managing committee of IFA Western Region also, which is International Fiscal Association. He has spoken on numerous topics at study circles, seminars, events, courses, and also been a co-author of one of BCA's books, which is not in the profile that I'm reading, but he has also been author of a great piece that the society brought out. So Siddharth, a very warm welcome and thank you for taking this time for all of us. Shreyas, welcome. Shreyas is an indirect tax partner at DPS and Company. His functional expertise include GST, customs, foreign trade policy, and erstwhile laws like excise, service tax, central sales tax, and state VAT. He has experience in handling matters related to indirect tax in both litigation side, so he is representing clients, and also on the advisory side. And he's involved in advising various MNCs and Indian conglomerates in sectors like manufacturing, financial service, entertainment, logistics, information technology, real estate, and so on. He has made representations to the state and central governments, and he's also an accredited GST trainer. So in Shreyas, we have a trainer again, and he has trained at the National Academy of Customs and Indirect Taxes and Narcotics, which is under the Ministry of Finance. He has been a member of committees of the ICAI, Bombay Chartered Accountants Society, CBO, CTC, and of course, he has been a speaker at various industry and professional forums of the Western region of Chartered Accountants, BCA, and Chamber of Tax Consultants. So he has, of course, authored numerous articles on these subjects. So we have this brilliant panel, and I can't wait to get started. We will, keep the whole session focused on these three aspects. We will have Dr. Phadnis start right away and tell us the economic and the broad outline of the budget, and also we'll keep the relevant parts in focus. And then we will move to the tax, the direct tax, international tax aspect, and to the indirect tax aspects. And of course, we want to make sure that all our audience have adequate opportunity to ask questions. So please send, as you hear the speaker, if you have some questions or clarification that you need, put it in the chat box, and they'll come and we'll try to answer as many questions as possible. So Dr. Phadnis, over to you.
Thank you very much, C.A. Raman, for a brilliant overview of the budget theme this year. And probably a lot of that also holds true every year. So very quickly, I'll share my presentation and I'll stick to my time so that my other co-panelists also get adequate time to give justice to their thoughts. So essentially, I'm also keeping this in mind that a lot of our participants in this panel discussion are youth. They're from colleges. So a part of my focus is naturally on the opportunities for them, which are thrown by the budget. And of course, my co-panelists will deal with some of the other important issues which are impacting the middle class and from a tax perspective. So I'm sure we'll have, a comprehensive view of the budget through three of us. Very quickly, for all of us to be aware of the fiscal scenario, for the benefit of students, the fiscal deficit is a very important metric because typically in a developing country like ours, it is expected that the expenditure would exceed the revenue of the government. And we can see for last 25 years, consistently, the government has been spending more than what its sources are. The question is, how much more is an important issue. And we could all see that right on 2020, the government had to really open its purse because that was once in a century pandemic. And we had to support a huge number of our populace as well as our industry, which was suffering. So we can see there that 9.5% extra spending over the government's revenue was necessary, and that was done. But then the government has been very prudent to start tightening this, and gradually we are now moving towards a 4.5% deficit by 2025-26. The budget focuses on bringing it down to 5.9% next year, which is very important because it is always a temptation to spend more, and particularly when this is a budget which is going to be kind of the last budget before the next elections. That could be a temptation, but the government has been prudent in terms of ensuring that they don't go overboard with it. Now, why this is important is because, as we can see here, the rate at which the government borrows depends on, how effectively they are able to control the deficit. We can see here a 25-year view of the expectation of the market from the government when the government borrows money. And that is, therefore, you can see this chart's title as a 10-year bond yield. And we can clearly see that over 25 years, as we are managing the country better, as the finance of the system is getting managed better, the risk associated with the government's borrowing is gradually coming down. But we also see clear cyclicality in it. And over last year and a half, the expectation of the market was climbing up, as we can see towards the end of the chart. But now gradually these expectations will stabilize and they will start to fall, which is important because if the government itself is going to borrow huge sums of money, as we're going to see soon, it has an impact on other borrowers. And if the government sets a benchmark in terms of what is the rate at which it's going to borrow, everyone else is going to borrow at rates higher than that, because there is no risk better than the government in any economy. So we can clearly see that gradually, like people like us who borrowed our first housing loan, we have to pay 15.5% to 16% interest in the early 90s, because the government itself was borrowing at very high rates. And now, of course, I think that has become a museum piece. Now, all of you are going to borrow at very fine rates because the government itself is going to borrow at much better rates now. And that's important because, as we're going to see on this very next slide, interest cost is a very important component of our budget. If you can see towards the end of that panel, and just for ease of surfing this slide, I have converted all these numbers into lakhs of crores. So in other words, if you see 2022-23 RE, which is revised estimate column, and come to the interest row, 9.4 lakh crores is budgeted for this current year as just interest payment out of 34.6 crore of the total revenue expenditure, which means a large part of the government spending is tied to the interest cost itself. And next year, that's going to be 10.8 lakh crores, which is quite significant. It's almost 1/3 of the total budget. Hopefully, over the years, as the interest rates come down, it will start to pinch less to the government, and the government will be able to spend more on development and accelerate the spending which is required on health and education. So we are moving in that direction, but it will take a few more years. One more highlight of this slide is, if you can see the last number there, that's around 10 lakh crore number, which is capital expenditure, which is one of the highlights of this year's budget, that next year the government is going to spend on capital expenditure. All of us know the difference between capital expenditure and revenue expenditure. Revenue expenditure's benefit expires in that year, but capital expenditure is something which can benefit over generations. And you can see a significant rise which has been planned at 37% from current year's 7.3 lakh crores, which is very important because even now, the private sector is still not in a mood to open its purse to start building capacities. And particularly in light of what's happening globally, where in some economies there are clouds of recession and slowing down in many other economies, our export engine may not start firing very soon. And that's where the capacity building by private sector may slightly get delayed. And that's where the government is expected to do the heavy lifting. And that's where this 10 lakh crore becomes extremely important. Now, something very important, but something which was not talked too much in this year's budget was the transformational achievements that the government has done, which are going to really help and which have helped the last mile. So, huge number of 11.7 crore toilets have been built, 9.6 crore LPG connections have been rolled out, 220 crore COVID vaccinations, and we have also supported other nations. 47.8 crore Janadhan bank accounts of the lowest of the pyramid, insurance cover for 44.6 crore people under the PM Suraksha Bima Yojana, and cash transfer of 2.2 lakh crores to 11 crore farmers. Now, why this is important is that once the basic aspirations of people are met, the aspirations of the nation start firing up. And that's where the youth's aspiration can be fructified, can be realized. And we are now at that important point of time in history where the government is almost able to meet the basic expectations of people. 2023, every household will get the potted water, right through taps in their houses. And the last mile of building houses is also underway, and almost 79,000 crores have been budgeted for building low-cost housing. Now, once this is taken care of, the youth can really benefit from the next level of aspirations, which is learning, skilling, and so on. So therefore, in the next 5 minutes, I'm going to really talk about very interesting initiatives which are going to take shape, and that's going to help our next level of creativity. So whether it is the Agricultural Accelerator Fund for creating many more agri startups, to a very interesting reference to millets. This is a year of the millets. This is the year when we are also providing G20 leadership. And I'm sure in the 200 meetings which are going to happen around the country, there will be delicacies of millets will be served by our country to the guests. And we are going to promote millets as Shri Anna, which is an alternative to the traditional food grains, but where we are the largest producer in the world today and the second largest exporter. But we have the capability of providing leadership in millets, jowar, bajra, and so many regional varieties. To help the aspirations of learning, there is going to be a national digital library for children and adolescents, both in regional languages and English. Very interesting recognition of people who contribute with their hands, with creativity. The PM Vikas Yojana, which is focused on the Vishwakarmas of our country, where we have a very rich tradition. There is going to be an effort to help them scale up, build their quality, reach markets, and through the initiative of creating 50 tourist centers of excellence, we'll also see the foreign tourists getting an access to the skills of our traditional handicrafts and artisans. So that's going to be something phenomenal, and that should create a lot of incremental income opportunities. The Kaushal Vikas Yojana, Pradhan Mantri Kaushal Vikas Yojana, the 4.0 version, which is now going to be focused on IoT, drones, robotics, artificial intelligence, which is going to be aided by a unified Skill India digital program. So you can also have access to a lot of learning through digital platforms. And something very interesting is going to be the National Apprenticeship Promotion Scheme, where the government is going to do the direct transfer to 47 lakh youth. But that will provide an enormous opportunity for our SMEs and companies to engage youth. Youth will get an opportunity to build new experiential skills, and the government is going to, arrange for their payment. So that's, I think, going to be a win-win across industry and our youth. And as I already mentioned, 50 destinations for tourism supported by technology, apps, and security arrangements for tourists is going to be an enormous opportunity. One last slide before I hand over to my co-panelists, and that's going to be, again, a very interesting concept of unity malls, which are going to come up in practically every district of our country, either at the district center or an important tourist center, promoting the one district, one product idea. So a couple of years ago, this idea came that every district should specialize in one product so that we have scale. And also, of course, the handicrafts, which are specialists to that district, are now going to be promoted through these unity malls. That will be a wonderful opportunity. SEBI, it looks like, is going to be now going to empower NISM with a structure whereby looks like NISM may become a deemed university which can award degrees, and that's going to provide opportunity for our youth. And also, of course, opportunity for the other professionals to upgrade themselves in respect of the security market knowledge. We are all hosting G20, and India is now trying to provide leadership in many domains. And there are a couple of examples here that 1 crore farmers are going to be supported through 10,000 bio input resource centers to move towards natural farming. Now, imagine the impact of that if we are able to succeed. We are going to get practically very, very healthy food. The government will be able to spend, will be needed to spend much less on health initiatives if the quality of food improves. And here we can provide global leadership. We are already talking about the green initiative, and we have an opportunity to provide that leadership as well. And that's where the new waste to wealth plants, Gobardhan, can also provide a model whereby we can start converting waste to wealth. Also, the artificial intelligence, the 5G are going to provide a lot of opportunities. And lastly, a very interesting idea of lab-grown diamonds, where one of the IITs is going to work on this over the next 5 years. And imagine if we are able to scale this up, the import dependence that we have on raw diamonds, which we polish, and we have a 70% dominance in the global, finished gems market, we would actually reduce our import dependence. And this is going to also provide a very interesting opportunity for a lot of our youth. So I think I have tried to restrict to my time so that I don't eat into my co-panelist time. They also have a lot to say. But I have tried to give an overview about the new direction that our country is wanting to take after meeting the basic needs of our populace. As Raman very rightly said, we have a lot of challenges meeting expectations of a diverse set of people. But I think the government is now in a frame of mind where we are able to take the next leap. So thank you very much for the opportunity, and I look forward to more interactions.
Thank you, Dr. Fadnis. Siddharth, you want to walk us through some changes relating to direct tax and international tax?
Yeah, sure. So thank you, Forum, for this opportunity, and Raman Bhai for a kind introduction. Friends, I would straight away summarize the entire direct tax proposal through one anecdote, which I would like to share. If you look at the horizon of Finance Minister, youth power was one of the focus area. Now, the direct tax proposals exactly highlight that fact for the reason that a young speaker like me gets an opportunity to speak on budget, because the changes are such that you don't need an expert to explain you the nitty-gritties of those amendments. And that's where the finance minister gave opportunity to young professionals like us to come and speak. Well, that was on a little lighter side, but looking at the overall changes in the proposal, if we were to put it in chronology, the first thing which impacts the most and which is most awaited by people, a common man, is the rate of taxes. Though there is no change in rate of tax per se, except for the drive which government is making to make the new regime of taxation the default regime of taxation. There is a step taken towards it. And what is the differentiation between the old regime and the new regime? Ideally, in new regime, government's focus is to remove all investment-based deductions or expenditure-based claims like Mediclaim, etc., and reduce the slabs to a certain extent. Instead of keeping 3 slabs, they have expanded it to 5 slabs with a smaller rate brackets in some of the segments. And there the focus of government is that if you don't invest or don't make those expenditures, and if your income is up to 7 lakh rupees, then by mechanism of a rebate, you will not be paying any taxes. This new regime, in case of salaried employees having income up to 7 lakh rupees, will get an additional advantage because standard deduction will be allowed to them, which is up to 50,000. Without getting critical of the facts that how these amounts have been put across, I believe that this is the regime which government wants to promote that. So if an individual whose salary is not making any investment and having an income up to 7,50,000 would not end up paying any tax at all. The moment you have 7,51,000, you end up paying the entire tax, rebate goes away. So basically a situation where there would be certain employees who would go to their employers and refund their incentive back, saying that I'm crossing the 7 lakh limit, if it is just marginal in nature, and say that, okay, it's better not to pay tax. Or in overall scheme, the new regime gives a lot of advantage to the highest tax bracket group, because this time another major change for them is that the surcharge, which was increased to the highest surcharge was at 37%, has been capped at 25% this year. However, that is applicable only if person opts for the new regime. That means the highest tax bracket or HNIs or ultra HNIs would be benefited to the larger extent if they opt for the new scheme, because the surcharge will be capped at 25%. There were exclusions given last year itself in respect of capping of surcharge. That means in categories of income like dividend, capital gains of any nature, the surcharge was to be capped at 15%. That continues as it is. So as far as the scheme of taxation is concerned, largely the rates have remained consistent. One additional incentive, so as to say, which is given to a new category of manufacturers, which will be in the form of cooperative societies, would be entitled to a lower rate of 15%, provided cooperative societies are registered, formed after 1st of April 23, that is after the provision is brought into force, and manufacturing is commenced on or before 31st of March 2024. Quite ambitious, I must say, because what we are saying is that when we brought in the provision of companies entitled to take this benefit, we said that, okay, any company incorporated after June or July of 2019, or sorry, October of 2019 would be entitled to this benefit, provided they commence manufacturing till 2022. So there we had a horizon of 3 years that companies would take time to set up. Here, I don't know with what mindset we have only kept 1 year as a provision, but we could have kept it right away 2 years or 3 years timeline for them also to set up in that same time frame. Another aspect is, while this incentive is given to cooperative societies, only those cooperative societies which manufacture those goods or income arising from those manufacture or ancillary incidental activity will only be entitled to the rationalized rate of 15%. Any other income which is generated by them would be chargeable to tax at 22% plus surcharge, etc. So that is new scheme as far as taxation rates are concerned. Other than that, small changes on certain TDS provisions which have been made. Mainly, one of the major relief is for certain category of non-filers. So last year, there was a provision introduced that in case if a person is categorized as a non-filer of return of income, the TDS on the amounts paid to such person would be deducted at twice the rate at which it ought to have been deducted. Now, this year, an amendment has been made to provide certain category of non-filers, though exactly they would not fall within the category of non-filers, but those persons who are not required to file return of income in India will be not subjected to double rate of tax and will not be classified as non-filer. The only catch there is government has again taken onus on them that only those category of persons which government will notify. So we still need to wait for the notification to get that advantage, but that is one relief which has been given. New regime of taxation for online gaming and similarly withholding tax. So any income earned by an individual or by public at large from online gamings, be it rummy, be it any kind of sport team selection, and any money earned therefrom would be subject to flat 30% rate of tax, and TDS is to be deducted by the service provider or an intermediary game online platform or the intermediary before releasing the payment in cash. And where there is a consideration in kind and cash both, the tax is to be deducted from the cash component, and before releasing that cash component, if there is a shortfall, can be recovered by such entity. So that's a straight tax regime for earnings from winnings from lotteries. And in case of horse races, a small clarification, there was a threshold, a basic threshold limit of 10,000. There was, it is stated that there was a misuse by claiming 10,000 per transaction as a basic limit, and therefore many people were escaping that. Now it has been said that 10,000 is a limit for the financial year, and therefore any person winning that would be subjected to TDS and income will be brought to tax. As far as Agniveers are concerned, a new regime has been introduced for a category of employees whom we know that the Agniveer scheme was launched by Government of India for employing youth in the defense segment, limited period job opportunities, and which would again streamline those people in future and will be available for government in defense segment. So a special regime of taxation has been introduced for them, and any contribution made by such Agniveer to their Agniveer funds, which will be created by government, all those would be subject matter of deduction for them. So that is something which is available. As far as exemption for available for reinvestment of the proceeds of sale derived when there is a capital gain or a long-term capital gain on sale of house property and reinvested in another house property. It was the understanding of the government that large ticket size players have been claiming exemption by reinvesting in high ticket size houses. And therefore now they have come out with a provision to cap the reinvestment proceeds at 10 crore itself. And anything above 10 crore, they would still be paying capital gains taxes. Now, the only catch here is actually, if you look at the provisions of 54, if you, let's say, have two houses, you have sold two independent houses and bought two independent houses again. So you would be entitled to get that 10 crore twice, because it is qua the house. You sell one house and buy one house, sell another house and buy another house, you get 10 crores in both in respect of both the houses. So that still will be there. New scheme of taxation for market linked debentures, which earlier were getting excluded. So now they will be classified as derivative, and any gain arising from such market linked debentures would be taxed as short-term capital gains mandatorily under the new provisions of section 50AA. And one of the concerning change which may impact a lot of small players as well is section 28(4), which basically included hitherto any benefit or perquisite which was derived in kind by any person in the course of its business or profession was chargeable to tax. Now an amendment has been brought because last year a new provision for withholding of tax under 194R was introduced for any benefit or perquisite given by any person to a person in the course of business or profession, engaged in the business or profession, subject to the limit of 50,000. Now, what has been clarified is there was a circular of 1960s which said that any payment in cash is not a benefit or would not be a perquisite So overturn that. Now amendment has been made to say that any benefit or perquisite, irrespective of whether it is in cash or in kind, or whether it is partly in cash or kind, would be covered. So now there were concerns raised by people to say that would this also arise in case where there is a waiver of loan given by people in the ordinary course of business. So just to put it by way of an example, if an individual has given a loan to a friend's business concern, and by any means that person is unable to pay or that entity is unable to pay the loan, people used to waive it off. Now, could one regard this as a benefit in cash is the question. In my humble view, the principle laid down earlier by Mahindra and Mahindra decision, the Supreme Court had laid down the principles, though it was revolving around the provision, existing provisions of 28(4), and so I believe that still in case of capital amount, one could still argue that that is not taxable. But yes, it's a situation where now one has to be cautious while writing off of such loans. From an individual perspective, another change is increase in the limit for professionals under 44 ADA. From 50 lakh rupees, it has been increased to 75 lakh rupees. That is in case where the books of accounts are not required to be maintained or not maintained, and 50%, a minimum of 50% of the gross receipts are offered to tax. So that's a welcome move by for some professionals who were struggling because of the lower limit. A lot of rationalization has been done in respect of provisions which were governing the charitable trusts. Charitable trust has been a key focus of the government, and one of the smaller impacts is that out of the list of eligible entities which were entitled to, or which by contributing to them a person was entitled to claim 100% deduction, some of the Gandhis have been dropped out of that. So that is just an omission from the list who could get the advantage, and or by contributing to those memorial or charitable funds, one could get advantage of ATG. That has been done away with. Other than that, rationalization for the trust. So if there were charitable trusts which were required to spend at least 85% of their receipts, except for the corpus receipts during the year, it is said that they were taking advantage by contributing certain amounts to another charitable foundations or trusts, and therefore were not meeting their 85% requirement. In order to curb that, it has been proposed now that the 85% will be recognized as the amount contributed to such charitable trust. So it would not be entitled for 100% deduction. Only if 100 rupees is contributed by one charitable trust to another, 85% of that will be recognized as being application of the funds. So the sanctity of 15% remains, and unless you do it for a corpus, a contribution or corpus setup, you would not get that advantage. Similarly, provisions have been made for cancellation of registration. So basically there were provisions whereby cancellation could be made only in case where there was non-furnishing of information or inaccurate information was being permitted. Now Principal Commissioner has been empowered to cancel irrespective of those criteria if he finds any other lacunas in that. And last, which is most talked about, is basically increase in the limit on tax collection at source, which was at 5% in case of liberalized remittance scheme, which an individual was making in foreign exchange under the FEMA. Earlier, as far as the medical and educational remittances are concerned, the amount of TCS was 0.5%, which continues to be as it is. In case of foreign tour packages and other remittances which were made under LRS, the TCS was collected at 5%. Now that amount has been increased from 5% to 20%. The only irrationality, which is last year when the provision was introduced, it was said that 5% has been brought in just to track down those remittances which have been made. I don't know how tracking becomes better if the rate is increased from 5 to 20%. Well, with this, I would summarize the budget provisions which are there this year, and would like to address specific questions if we have in the later part of the session. Over to you, Raman bhai.
Yes, Siddharth, thank you. Shreyas, you want to walk us through quickly and simply some of the provisions around indirect taxes and even customs, foreign trade, any other things that you feel is important for this group?
Yeah. First, thank you for thank you Forum for having me share my views. Secondly, thank you Raman bhai for setting the context right. Now, under indirect taxes, first I would like to talk what are the indirect taxes and what are the taxes that are affected by the budget. So, in the entire realm of indirect tax, one, there is customs law, which is regulated by the central government. Second, there is the GST law. Both of this, we are very well aware that both of them are covered under the union budget. Third is the foreign trade policy, which is regulated by DGFT, Director General of Foreign Trade. So DGFT has a 5-year policy. Okay, so though it being part of indirect tax is really not affected by the budget. And the fourth is the state excise and central sales tax laws, which is typically levied on alcohol and petroleum products. So last two are not really affected by the budget. The customs law is entirely covered under the union budget, and interesting piece is the GST. So we hear a lot of questions, how is GST really regulated? We hear certain amendments and in the budget, certain amendments are proposed by the GST Council. So how does this really work? So the entire GST law is working on interestingly, the recommendations of the GST Council. So GST Council recommends what are the changes to be proposed. It is ultimately the central government and the state governments which collectively have to implement. So if we see this year's budget, all the amendments are kind of proposed, are those which are proposed by the GST Council, but they have to go through the parliament to get them enacted. So that is one. Also, what we've seen is, the trend is that the GST law that we have will ultimately become a skeleton law, that, it will have provisions in place wherein it will be governed by rules. So, as we go forward, the budget would be irrelevant from GST perspective going forward. And, the amendments will be more and more proposed by the monthly or the bi-monthly GST Council meets that we have. So, key takeaways are, presently it is regulated by GST Council. However, for certain amendments, we do have to go to the parliament. Second part is, when will these amendments be really effective, especially the legislative amendments? So many of these amendments have to be passed first by the parliament, which will receive presidential assent. Secondly, it also needs to be passed by the state legislators. So going by the past history, we see some of these amendments will be effective as late as 8 to 9 months down the line. So once the presidential assent is received to this bill, then the state legislators will pass in their sessions. Some may pass in the monsoon sessions, some may pass in the winter sessions. Then a notification will be issued to really give effect to these amendments. So, some of the amendments could even take 1 to 2 years in the past history that we've seen. Though it is announced in the budget, the real notification comes, after 1 or 2 years also. So effective date is also what we need to monitor. Now, going into the indirect tax proposals, all the proposals have been under the theme of either ease of doing business or enhancing the Make in India initiatives. So this has been the larger theme of the proposed amendments. Friends, one notion that all of us have is, GST number is mandatory for doing a business in India. So today, if you as a startup, you want to do any business, banks will ask you your GST registration. All the financial institutions will ask for a GST number. All the e-commerce websites will ask for a GST number. So there is a notion that without a GST number, we really can't start a business. Friends, that notion is absolutely incorrect. And to further incentivize this, there is an amendment in this year's budget to the effect that if you are into a business which is wholly exempt from tax, you really don't require a GST registration. Though this was there in the provisions, due to drafting of certain provisions, there wasn't a clarity. For example, there are a lot of startups in the space of organic farming, in the space of trading of organic fruits and vegetables. So essentially, their entire business is exempt. However, the law requires you to register, even if, example, say you make a 10,000 rupee payment to a lawyer, you pay a legal fees, you need to pay GST. For paying GST, you need to register under the GST laws. So now it has been clarified that if your business is entirely out of the GST net, and merely if you have some payments under reverse charge, the GST number is not required. Hence, friends, now whenever we are starting a new business, especially in the initial stages where there could be cost constraints, so really need to think whether that GST number is required or not. Second is for the composition dealers. Now, composition dealers are small taxpayers up to a turnover of 1.5 CRs. Instead of going through the entire procedural aspects of GST, government has given a simplified scheme that they pay tax at 1 or 2% and do away with very few compliances, quarterly filings. Now, the provisions were such that if these dealers are to supply goods or services through e-commerce platforms, they can't offer this composition scheme. Hence, example, you want to sell goods on Amazon, you can't offer this composition scheme. You have to go for a regular scheme and undertake entire GST compliances. So now this has been relaxed to say that if you are supplying goods through even e-commerce operators, that mandatory, there is no debarring. You can still opt for the composition scheme. However, what is still missing is if you are supplying services through e-commerce operators, you need to mandatory register. So there are a lot of cases wherein we are supplying services through online portals. For them, mandatory registration is still required. Friends, there is a lot of hue and cry over the criminal provisions under the GST law. We've seen a lot of arrests, and whenever there arrest provisions are there, it is more likely that it could be used by some authorities or the other. It could be used, to install fear in the minds of taxpayers. Hence, on the constant policy of ease of doing business, what they have done is non-serious offenses, they've tried to decriminalize them. So, example, offenses such that you are not maintain a particular set of books. So really economic offenses, courts have time and again told that these offenses do not require to trigger any arrest provisions. And all these provisions have been sought to be decriminalized. All these serious offenses, example, you are into the racket of issuance of fake invoices, all those will still continue to attract the criminal provisions. So that was one. And the threshold limit for criminal offenses has been raised from 1 CR to 2 CR. So definitely thumbs up to this set of provisions. Also, what we've seen is there are too many rates under the customs. So you pick up any number in the multiples of 2.5, you will find some or the other customs rate. So there are as many customs rate as possible. So now what the policy has been to minimize the number of rates that we have. So what they have done is, so there is one is basic customs duty, and there are a hell lot of cesses that are levied. So what they have tried to do is to maintain the overall percentage to a same as was pre-budget, but the management has been done in the terms of altering the basic customs duty and the cesses, and ultimately their aim is to have 7-8 different rates for customs. So this was all on the ease of doing business front. The negative parts or the issues has been consistently is to restrict the availability of input tax credit. Friends, under the GST law, there is input tax credit is available. Hence, you make payment for any goods or services, you get a credit of those taxes. Ultimately, what GST you pay on your outward income or supply, you can set it off. So the whole purpose of GST law was to avoid the cascading effect of taxes, that is tax on taxes, and hence input tax credit should be fungible, means should be completely allowable. However, the unfortunate trend that we have seen is constantly there has been more and more items put in the list wherein you are not allowed input tax credit. One of such is input tax credit on CSR related activity. Friends, on one hand, the Companies Act, Section 135 mandates that corporates need to involve under CSR activities which would be a few percentage of their net profit. On the other hand, the government has sought to deny input tax credit on these expenses. Example, as a company today, if I want to initiate any CSR activity, I have three options. One is, example, I am into the pharmaceutical business. What I can do is the medicines that I produce myself, manufacture myself, I can, donate to the needy by way of CSR initiatives. Second option is I will purchase goods or services and then I will donate it to the required person. Third option is I will appoint an implementing agency to undertake the CSR initiatives. Now, under all the three brackets, there would be some input tax credit that is available. So there was a controversy whether this tax credit is available to you or not, especially when the company law mandates me to undertake a CSR activity. On this, there was interpretational issue right from the initiation of GST. In service tax law, we had a favorable decision. However, the government has unfortunately negatively clarified that input tax credit on CSR expenses is not available. That means government is saying is mandatorily you have to do a charity, but we will not be part of that charity. It is, you have to do it, but tax credit we cannot allow. That is to align with the provisions of income tax law, which also doesn't allow CSR expenses to be allowed as a business deduction. So friends, this is the amendments as far as indirect tax concerns. There are a whole lot of rate changes, which maybe we'll take up in further questions. So back to you, Raman.
Thank you, Shreyas. We have some questions, and I think I'll take those questions from the audience. The first question is, what is the idea or motive behind a rebate-free direct tax regime? And Siddharth, probably you can take this, and if Dr. Fadnis wants to add, even as I was looking at the budget, some of these deductions and exemptions are also an encouragement to lay citizens to make certain investments which are in their own good, and it will save them some taxes, and it will help them with their retirement, such as PPF, Mediclaim. It puts less pressure on public infrastructure, etc. So these are just good habits for which you give a candy. And this whole idea that let's move on to rebate-free tax regime. How do you look at both of these sides? And Dr. Fadnis, we would like to hear from you as well.
So, as I said initially, government is trying to push people towards not towards saving but expenditure. This is, I believe, from a short-term perspective, yes, good that in-hand disposal income for the salaried class or a lower income class is better. But in long run, this has its own repercussions, because if we recently see the COVID experience, many people could sustain because of their savings which were there during those difficult times. Now, if you discourage younger generation or young entrepreneurs or businessmen or even middle class people from saving, because we need to look at tax provisions not through the lens of penalizing people, but we should create more incentive for people to comply. So it could be in a slightly different way one could look at it. So in my view, rebate-free, deduction-free regime is not something which we want as a country or as a nation. We should look at it. In short run, yes, it will increase indirect tax collections because of disposal income, consumption, more circulation of money in the economy, where you increase the spending power. But it has its own repercussions. So it only impacts those people who have that particular set of income. Also, my point is that from a government perspective, we should look at broadening the framework of minimum income. We can't look at people earning 7 lakh rupees per annum as middle class people. I mean, if we are having a horizon of creating a 6 trillion, 5 trillion economy, okay, we cannot say that my majority population will still earn 5 to 7 lakhs a year, and that is what I am giving them benefit for. So that's my take on that.
Thanks, Siddharth. Dr. Fadnis?
I think Siddharth Bhai has a knack of persuasion. So I think he made a great point. But I have a slightly different perspective on this. And out of the 6.5 crore filers, only 5 lakh people opted for the new tax regime. And my family members and myself are 3 of those. So, there is another way of looking at it, is that while it does incentivize people to save, as Siddharth very rightly pointed out, but sometimes also what happens is that there is also a tendency of financial products getting missold to people, where people invest in those products with the focus of tax saving rather than improving the returns. So I think there is also a need for people to free their mind out of the tax aspect of it and see in a very fresh way how they can maximize their returns. In fact, it's quite interesting that globally, house prices, it's not only in India, but globally, the prices of houses went up on the back of this tax saving craze. So people actually buy properties with the objective of reducing their tax burden rather than really driven by the need. So in my view, the new tax regimes gives you the freedom to focus on investing in a way that actually helps you to maximize returns rather than getting focused with certain instruments which give you a short-term benefit but may tie you down with low returns for a very long time. So while Siddharth Bhai's argument in terms of a saving-driven economy is very valid, but at the same time, there is another angle to it, which I thought of just putting before you.
Just one piggyback question on this new regime and old regime. And for those who don't know, the old regime gives you several deductions to reduce from your income. And the new regime says, okay, I'll tax you starting from this at a flat rate with just a handful of, deductions allowable. But Siddharth, when you look at the old regime and the new regime, is there really a significant benefit in going to the new regime? Other than what Dr. Fadnis mentioned, in terms of pure tax outflow.
So pure tax outflow. So there are again 2 sets of comparatives there. If let's say in an old regime, someone is having housing loan, for example, okay, where your interest outflow anyways is deductible under 24 to the extent of 2 lakh rupees. And your principal component is deductible under ATC automatically. So without investment, you are entitled to that. So from that perspective, people who are falling in that category where EMI anyways has to be paid, you can't default. So those amounts are already entitlements. Plus last year, a couple of years back when they introduced NPS, there was good traction of people who were not investing in PPFs and getting into NPS, which is also, kind of a social security because money you lock in till retirement. But that was an additional 50,000 saving. So from that perspective, last time when we made comparison between old and new regime, up to 15 lakh rupees, if you have income, new regime was beneficial. If you have more than 15 lakh of total income, then it was not having that much of impact. Now this year it is making impact because of the surcharge rationalization in the highest slab. So again, when you go up to few crore, 10 crore above amount, so 15 crore, you will be on the same footing. Above that, again, you will be benefited because of the surcharge rate. So that's my comparative on these 2 regimes as far as benefit is concerned. And from a very basic perspective, those who are, let's say, doing a low skill job, for them, they don't understand investment, as sir rightly pointed out, that mis-selling of the schemes, okay, because of which they end up investing their money where they may lose. So for them, it's a no-brainer that, okay, if we don't understand, take it back, invest wherever you find it feasible. Maybe it may be a traditional mechanism of investing in jewelry, gold, or whatever the instrument it is, but you retain that money so that it's basically you can have multiple options available, but you can't drive people to one direction. And a very small point on this mis-selling part of it, it actually has been the tendency of government to impact the common people rather than stopping the people who are selling those schemes. It's like, liquor is injurious to health and smoking is injurious to health. We increase taxes every year and print bigger pages, but we know for sure that they are the point of collection of taxes, so we keep them.
Yes, generally the highest source of tax are all these evil goods, if we can say so. So in fact, government loves it more than any other person in terms of, revenue that it fetches for them. There was one more question about, the MSME part, and this is probably for Shreyas and Siddharth both. The MSME Act generally requires that, you make payment to micro, small enterprises in 45 days. And this has raked up a new sort of controversy when they are saying that, we will disallow if you have not actually paid them. Now, yes, it's a great idea that, especially these enterprises are not squeezed and the money is not blocked for them. And obviously GST does quite a bit on that in blocking their money, but at least there is some relief through these kind of provisions. How do you look at it that, when there are accruals? This is one question from Mr. Chaudhary, and also when 45 days are expiring after 31st March. So would this fall? And the third question is that, are they both dealt with differently under GST and under income tax, or are they congruent in that sense that, when you have a law, you have one thing to show under one law and another face to show in the other law? Siddharth, you want to get going on this?
Yes. So MSME payment, I would believe that the provision is a welcome provision, because largely what we have seen is that larger organizations used to suppress a lot with the smaller organizations who do not have capacity to negotiate and bargain. So a lot of payments were getting stuck for long. Now it's a very good mechanism whereby a small and medium enterprise, as they are classified under MSME Act, they need to be paid within the due date, which is either agreed upon in writing, which cannot exceed 45 days as per the MSME Act, and or in 15 days time. Now this is the due date which is prescribed under MSME Act. You pay them in cash. 43B is a provision whereby certain amounts which are payable are deductible on payment basis in the year in which the payment is made. So let's say if there is an invoice which is raised in the month of May, which is due in the month of June, for taking 45 days as a base, any payment which is made during that financial year will still be allowed. There will be no disallowance on that because it is paid during the financial year itself. Now, when we are talking about payments which are accruing in the month of March, let's say I booked a bill and it is payable, because what I need to see is amount should be payable also. Okay, so if amount is payable and it is paid even after March, but within the 15 or 45 days due date, it would be allowed. However, it would not be allowed if you do not make payment within those due dates, irrespective of the fact that you have made payment before the due date of filing of return of income. So here the point is that if it is beyond the limit which is stated in MSME Act, then those amounts will not be allowed. And here it is 100% disallowance, not even 30%. Had it been 30% disallowance, people would have still not made the payment saying that, okay, what is the overall loss? But I believe it's a very good provision from an income tax perspective. From a compliance perspective, slightly difficult, because now auditor will have to classify who falls under small and medium enterprise and, look at whether payment terms were 45 days or 15 days and, accordingly report it. And if we are unable to do that, we have a general disclaimer as represented by the management. So we'll go ahead by it.
So do you feel that, say an audit fee, which is booked and it is not payable up until the audit is done, say in September, I mean, you could go easily up to first week of September, then we will have a further challenge that all these fees will get disallowed?
Ideally not, because here, as far as the MSME Act is concerned, the due date also is the day when the goods are delivered or services are rendered. From there, that 15 days or 45 days time limit starts. So technically in audit fees which you have booked in March, where audit services have not been provided, that amount has not even become payable. So
Right.
one could take an exception in those cases, though we should not, look at this as a planning tool for all other payments also, saying that services would be rendered subsequently. So it in case of audit fees, yes, this is something which comes to the rescue.
And deduction can be taken. You mean to say that, that would be a deductible expense like in the past.
Yeah, but the point is that after I raise the bill, my payment should be made within the due date specified in MSME Act, because what it says is payable, but which is beyond the limit which is stated therein. So, that anomaly would remain, but otherwise, in case of audit fees, there would be no disallowance, in my view.
Shreyas, how do you see whether MSMEs are treated differently under GST and income tax?
So under the GST law, there is a provision to say that if I am not paying to a vendor within 180 days, that is within 6 months, the tax credit that I have taken, I need to reverse along with interest. So there was a tendency, and in fact, we've seen many corporates who have a policy that none of my vendor should be not paid more than 180 days, else I'm triggering the interest provisions, except obviously in case of any disputes. So in that context, for those companies or corporates who are having, to delay their payment schedule and not attract any penalties. So now in that context, a timeline of 45 days or so would definitely help. So direct impact in terms of GST law wouldn't be there in terms of MSME provisions. But yeah, in terms of the mindset of the taxpayers that now I need an immediate allowability of expense, I'll not stretch it to 6 months. That is definitely welcome. Obviously, the compliance piece of it from a company or an auditor perspective is something to be looked at. Definitely.
And Siddharth, if the terms of trade between, say, the MSME party and the payer is such that, he forgoes the 45 days, will this still trigger? Because this will throw up, something into the tax audit report. It will bring something into the MSME reporting in the financials as an auditor and the preparer. Will this cause additional, challenges?
So I think this provision only affects micro and small enterprises. Medium enterprises are not touched by them. So
Right.
First, we need to look at the categorization of entities under these three segments. MSME Act covers all three categories and gives them, benefit under the MSME Act, which also, Udyog Aadhaar or Udyog number was given, and basis that registration basis, people were taking the advantage. Now, as far as the terms of agreement are concerned, if we, in my limited understanding and with the caveat that I'm not a lawyer, but MSME Act, the way it is written is that your terms of payment cannot exceed 45 days as per the MSME Act in case of small and medium enterprise, because it says provided in no case the payment that in writing also the payment term should not be more than 45 days. So that is a precondition given there that, okay, it cannot exceed. Now we consider a situation whereby in writing someone has agreed for a 120-day payment scheme.
Right.
And it falls within that category. Then from the wording of the provision, I would only look at 45 days, which is prescribed under MSME Act, and I cannot look at 120 days, which is agreed term, and I will have to disallow that.
So basically, government is saying that you can't have payment terms in excess of 45 days as soon as you deal with certain categories of businesses.
Correct. And I think that is a good encouragement, because these lot of entities were suppressed. No payments were made because they did not have power to, they want business basically. So they could not command their terms.
Right. Thank you. There was one more question on insurance premium. This 5 lakh limit that is specified. Do you feel that will result in some kind of a, discouragement for taking insurance policies which are of high value, and you will tax them when they are maturing?
Not at all. I would take you from what Mr. Fadnis said earlier, that these are the examples of mis-selling. Basically, for HNIs, fixed deposits were converted into insurance policies with fixed 8% return, 9% return, with a payout after 3 years, 4 years, 5 years. And that basically it was made it in a manner that insurance was a byproduct and investment is a primary product. And that's how the products were being sold. So from that perspective, there is no discouragement. Anyways, from a economic perspective, if you look at it, India's penetration in life insurance and medical insurance is still not more than 5%. We have not gone into double digits. So where are we looking at discouragement? We have still not covered ourselves. So there is ample scope. But as far as you can't look at insurance companies as an investment vehicle, fixed deposit, you can't make deposits with them. So in that way, the capping of amount at 5 lakh rupees is good, but one need to look at it and monitor it at subsequent stages to see that whether those premiums are justified enough where the coverage is also keep on increasing. So that is one thing which is there, but otherwise I believe that's a good measure to control mis-selling of those insurance products.
So it looks like there is a greater recognition that now the whole investment scenario is much more protected, through mutual fund, through SEBI, through other regulators, etc. So you don't need to, sell and sort of put people through the insurance route and give them, terrible returns as if it was a saving and investment opportunity.
Yeah, correct.
I think so that realization has happened and there is adequate infrastructure around us where investors can be protected. There was one more question and a quick answer. ITC denial on CSR activity. What could be the rationale quickly?
So rationale, in fact, a couple of days back, the CBIC chairman, answered this question. Their mindset is under the income tax law, CSR activities are not allowed as business deduction. So if we are giving input tax credit under the GST law, that would not be aligning the positions under the set of laws. And hence, it is their rationale. Obviously, the other rationale is to not lose on not lose on the revenue piece of it. But having said that, definitely not a welcome amendment.
Right. Dr. Fadnis, what makes India a bright spot? And, a lot of youth are probably listening through their classes. They have assembled in classrooms, etc. And the budget like this one and the future ones are really for them. They will see the real fruits of all the taxes that we all are paying today. And so our next generation, how do you see when the dark clouds, as they say, are looming in the western part of the globe? And they're all calling for recessionary, waves. How will India sort of tide through it? Whether it will stay where it is, it will keep growing, and it won't have too much of an impact from recession hitting other countries. How do you see that?
Sure. So basically, I think having met the basic necessities of a large populace, it's an opportunity for us to allow the talent which is hidden across our communities to blossom. And I think that's where the next phase of growth is going to come for us. And therefore, the next decade is going to be exciting from that perspective, that there are a lot of aspirations among the youth. I do some work for an NGO where we support the higher education of people who can't afford it. But we are amazed at the quality of talent which is there right across communities. And that is really the future of our country. We are one country where the median age is just 28, which means 70 crore population is less than 28 years. And that is something which creates a very bright future for us. And at the same time, from the infrastructure alignment, which is so necessary for providing access for both to and fro in terms of remote people to be able to come to the mainstream and for us to visit exotic locations within the country, we are now set to allow the domestic tourism to explode. We are also likely to be a major destination for global tourism. And so in a variety of ways, we have multiple engines which are going to fire. So far, it was the services which was firing. Now we are set to fire manufacturing. In a few years, it could be agri and tourism. So which means that we have so many engines which can fire. And on the other hand, we have shown the world our prowess in terms of fintech and pharma. So that's where we are also lending our helping hand to the world. And that's where we are a democracy with a very benign worldview, and which is reflected in the G20, the ethos, which is Vasudhaiva Kutumbakam. So that's really the broad-hearted culture that we are. And therefore, it is very embracing, all-encompassing kind of a culture. And therefore, we have a great opportunity. So from both in terms of the global connect, the global aspirations, we are all well set. And at the same time, when there is a recession in developing economies, it also gives us an economic boost, because the commodities become cheaper. And when commodities become cheaper, it's a bonanza for us, because we are a net importer of commodities. So it also helps. A global recession is very, very helpful to us.
Thank you, Dr. Phadnis. We are coming towards the end of this event, and some of the numbers that we see, and I always track the UPI numbers, and some 728 crore UPI transactions were recorded in December 22, and the amount was 12.8 lakh crores. And this UPI is absolutely, you can call it a magic, or you can call it whatever a similar word that you want to. Is just unbelievable how this has panned out on a year-on-year basis, doubling and then doubling the year after that. So we see this enormous power of inclusion, especially on the financial side, from UP, from RuPay to e-way bills to TREDS for MSME. I think we are seeing a lot of changes, and they are bound to have a very positive effect. And some of them are actually visible. I was listening to somebody speak, an investment person, and he said the tea seller across the street, he refuses to take cash. And he says, "Sir, paisa nahi hai, to, next time de do, athwa chai pee ke, you can go home. But I don't have time to give you change."
Right.
Because there's so much tea business going on that if I take, 20 rupees from you, find a 5 rupee coin, give it back, I don't have time, scan it with my QR code and, walk away.
Indeed.
But honestly, I can't accept cash. I think that's the change we are seeing all around us. So with those words, I want to thank everyone who has participated, especially the principals of these educational institutions, their professors, students, all the members, 24 frames, and I believe the youth especially, more interest they take in events like this one, in the budget, in the finances of their own as well as of the finances of the country. I think we are staring at a very bright future. Thank you all the speakers. On behalf of the forum, Dr. Phadnis, Siddharth, Shreyas, for sharing your wisdom and sharing your experience. We look forward to having you once again at another event. Till then, thank you so much and have a wonderful weekend.
Thank you.
Thank you so much. Thank you so much. Namaste to all.
Namaste. So thank you, everyone.
Yeah, it was great.
It was great. You are
Wonderful meeting, Siddharth and Shreyas.